To create a new employer, you either need to convert data from another program or run through the payroll setup wizard, which creates your employer. We have another video which talks about the payroll setup wizard, so if you haven't done that step yet, you'll probably want to review that video. Whether you converted data or whether or not you created your employer by going through the payroll setup wizard, you'll want to be able to know what settings are important on the employer setup and what things can be changed. And that's going to be done by editing the employer underneath setup, payroll details, and employers. I'm going to highlight my employer and click edit, or I can double click on it and it'll take me to the detail tab, which has several tabs underneath it. The general tab is going to have information that will be transferred to any tax forms that you produce out of CenterPoint. So if anything is missing, such as a contact name or a phone number, you can fill it in now. That information isn't always picked up in the payroll setup wizard, so you might want to add it here. If you are an employer who is subject to the Affordable Care Act and you want CenterPoint to be able to produce any of the tax documents for you, then you'll want to make sure that you select all of the items that apply to the coverage that you offer for your employees. If you offer self-insured coverage, then you'll want to go ahead and check self-insured coverage and then choose the origin of that self-insured coverage. Okay, if you are not subject to the Affordable Care Act, you do not need to worry about any of those settings. On the company tab, you're going to identify the companies or the funds that file underneath this employer. Each employer represents a single tax ID that you are going to file your tax reports under. So sometimes in a fund situation, you might have multiple funds that file underneath the same tax ID or a single employer. Otherwise, it's usually one company per employer. On the taxes tab is where we would see all of the taxes that you selected that you needed for this employer. So the federal and each of the states that you selected would have a check mark in them below. If you need to add another state, you can simply put a check mark in it. Okay, for each of the ones that were selected, it's going to add a level on this tree up at the top. So you see here I have federal, I have Colorado, I have Illinois, and I have Minnesota. So I have a level on the tree for each one of those. As you highlight each one of those levels down below, it's going to ask you which of the taxes at that level do you need for that employer. So if I highlight federal, it has a list of taxes there. If I highlight a state, it's going to have a list of taxes for that state. Okay, you're going to select which taxes you need if they were not selected already in the setup wizard. Then what you'll want to do is you'll want to work your way down through the tree the first time you come in here, just to make sure all of the settings are the way that you want them before your first pay run. On the right-hand side of the screen is going to have any information that the system might need for you to go ahead and select. So here is where you would fill in the tax ID, or at least verify that the tax ID is correct. And as we move our way down through the tree, some pieces might not have any details, and others are going to have things like liability accounts or expense accounts. Any liability account, so something like a tax here, when you take that tax out of an employee's paycheck, it's going to go to this liability account. Liability accounts need to be the same for all employees, so all employees will use the same liability account for Social Security tax. However, any expense accounts, and those are captured at the employer level here, any expense accounts that you select up here, it's just creating a default. So when you create a new employee, we'll default that expense account into their record. However, any expense accounts that are set here at the employer level can be overridden at the employee level. And you'll see that throughout all of these tabs, the taxes tab, the earnings tab, deductions tab. So liability accounts are set here on the employer record. An expense account creates a default for when you create a new employee, but can be changed when you create that new employee on the employee record. So you'll just want to work your way down through the tree on all of these items. And then federal unemployment and any of the state unemployments are going to have a rate there. For federal unemployment, we have some people who are not subject to federal unemployment, but they still want to track it because they may be subject to it at some point in time. So they may track that federal unemployment, but not calculate it. So that's what that checkbox is for. But any rate changes that you want to enter in, what you'll want to do is put in the effective date of that rate change. So this rate was set at that date, and any changes, so let's say that I had a new rate in 1/1 of 2024. I would click add. I would put in 1/1 of 24. Click OK, and then it would give default in the old rate, but it would allow me to go ahead and then change it. But it would still maintain that old rate. So it would have that old rate out there for any, pay runs up until the date of the effective date. So it doesn't use the rate until the effective date. So you can make rate changes ahead of time when you know them. Okay, again, you're just going to work your way down through the tree. For each of the states, like I said, it'll have a list of different taxes for that state. You're going to select which ones you need. Different states might have different options here. And then for each of those taxes, you just want to go through and fill in the details on the right-hand side and just make sure all of that is correct. Again, a lot of this information transfers to your tax forms, so you'll want to just make sure it's correct. I just want to point out that the employer record here on the taxes tab is where you will change your state unemployment rate when that changes each year. When you're issued your new state unemployment rate, you'll come in and put in the effective date by clicking add and then put in the new rate. If you set up workers' compensation classes, when you highlight that on the right-hand side, it's going to ask you if you want to post these to a general ledger. So you have two choices there. You can go ahead and post them to a general ledger, and it'll create a liability and expense entry into the general ledger. But if you don't want it to post to the general ledger, but you still want it to calculate workers' compensation for a report, you'll leave that unchecked, and then it'll just use it for reporting purposes. Okay, what you do want to identify is what liability account those will go to. And then you'll also need to tell us how we're going to handle overtime earnings. Are we going to use overtime at a premium wage base, so the base rate times the multiplier, or are we just using the base rate for those overtime hours? And that's going to depend on your state and how your state handles it there. And then for each one of those workers' compensation classes, we have the rates here. And again, you would change those just like you did the unemployment rate by putting in a new effective date and then going ahead and making a rate change. For any tax that you want to no longer be able to use, so if you don't want it to be able to be added to any new employees, let's say that you don't have any Minnesota employees anymore and you want to inactivate all of those taxes, you can go ahead and highlight the tax and then take the check mark out of the active status. But once it's been used in a payroll, you can't just come up here to the top and remove the state by unchecking it here. You can only inactivate each one of those taxes. So you would just go to each of the taxes and take the active status out of them. Okay, the remaining tabs, most of this is about setting up a default for when you create new employees. So a lot of what we're going to set on the earnings tab is just creating a default for when we create new employees. So what I'll see for earnings down below are all of the earnings I created underneath setup and earnings. And if I need to add one to this employer, all I have to do is put in a check mark on it. Now, when you create a new earning under setup and earnings, it should automatically get added to this employer. So you usually don't have to go ahead and put the check mark in there, but you can if it for some reason didn't get added. As I'm highlighted on the level over here for earnings, on the right-hand side, it's going to ask me just for overtime information, what are the regular hours in a week for your employees and the regular hours in a day? If you have employees that you pay via piece rate, and you need to do a minimum wage adjustment, there is a separate video on that, and you'll want to review the video on those settings. But You'll need to create a minimum wage adjustment earning, and then you'll need to set the minimum wage rates by clicking on this button. That came up on another screen for me, so I'm going to just drag it over. In here on this screen, then you'll need to just put in the federal minimum wage rate, and then for each state, you'll put in the minimum wage rate for that state. Okay, again, there's a separate video on how to go ahead and do that. If you are an employer who pays the employee's portion of FICA and Medicare for them, so not only the employer's portion, but you're also paying the employee's portion, you'll need to create a gross up earning so that we can gross up their wages so that their W-2s and things like that will all come out correctly, and so will the calculation of their taxes. So you'll create a gross up earning and then just identify that earning here. I don't have a gross up earning for my employees because we don't do that. If you are an employer who pays employees piece rate work, and in your state you are also need to, some states require you to also pay those employees for a break every so many hours that they work. So you'll need to create a break pay earning. And again, there is a separate video on this. And then you'll need to tell us how many minutes they're going to be paid for how many hours worked. And there's two ways to do that. If it's consistent, like they get paid 10 minutes for every 4 hours, you can do it like that. Or if it's got multiple levels, like for every for the first 4 hours, they're paid 10 minutes, but after 8 hours, they're paid 30 minutes. You can go ahead and put in those multiple levels here. Okay. Then for each one of the earnings, what we're going to do is highlight the earning, and each of them are pretty similar, so I'm just going to use hourly earning here. And on the right-hand side, the biggest part of identifying this is just identifying the expense account that's going to be defaulted into each new employee. So if you add this earning to a new employee, it will default this expense account to the employee as well. It can be overridden. Remember, all expense accounts can be changed on the employee record. So if this employee, the employee you create needs to go to a different expense account, it can be overridden. You can also select default profit centers to be added to employees that you add this earning to, a default location, tracking number 1 and tracking number 2, and also a project. Now, if you happen to be agriculture, these labels would say profit center, production year, and production series. If you were fund accounting, it would say department, location, tracking number 1 and tracking number 2. Okay, and then for each earning, you might have a place for a rate of pay. And if you put a rate of pay in here, this is just creating a default for when you create a new employee, it will default that rate in. This is not where you will go to update the rate for existing employees. It's just creating a default for new employees. So there's just a couple of other types of earnings that I do want to point out. If you have a piece rate earning, there is a place down at the bottom for you to identify the unit of measure. So this is a piece rate earning. My employees are getting paid per student. Okay, so that's their unit of measure. So you can select from a list of unit of measures. If the unit of measure you need isn't on the list, you can just click new and give it an abbreviation and a name, and that's all you really need for that unit of measure. If it is a manual overtime earning, one of the important things you'll want to select here is what is the multiplier. So we pay time and a half for overtime, so we put in our multiplier is 1.50. Because that's going to be the most important thing there. Okay, so I'm going to move over to the deductions and benefits tab because most of these earnings are pretty similar. They may have some different details, but it's all about setting up defaults that you want to be added to new employees when you add that earning to the employee. Deductions and benefits tab is similar. So down below, I'll highlight deductions and benefits, and down below is a list of the deductions and benefits that were set up under Setup, Payroll Details, Deductions and Benefits. I'm going to select which ones I need for this employer. If you create a new one, it should automatically get added to that employer, so you shouldn't need to come down here and check it. But if you skipped that step somehow and you need to manually add it, all you have to do is put a check mark in it. Okay, when you put the check mark in it, it adds a level of detail to the tree up here at the top. So for each one that I selected, I'm going to have a level on the tree. If it is a deduction, then you're going to have an employee level. If it is a benefit, you're going to have an employer level. So this one is both a deduction and a benefit. This one here is just a deduction. And so if it was just a benefit, it would have just the employer level. For each one of those on the right-hand side, you have the ability to go ahead and tell us what liability account it's going to go to. For the employee deduction, you may have a rate of pay. So these are just creating defaults for any new employee. So by putting a rate in here, when you create a new employee, it defaults that rate to the employee. Okay, you can always change it on the employee level. Okay, you might want to leave the rates at 0 and just set them when you add it to the employee. So by no means do you have to have a rate in here. So any accounts or anything else here that you select just creates a default for when you go ahead and add this to a new employee. Okay, so you'll work your way down through that, making sure that you have all the defaults that you want correct. Then we'll go over to the Leave tab. And for any leave that you created, you'll put a check mark in it and it'll create a level on the tree here. And for that leave item, you're going to just choose what the default earning is that is going to be used to take and redo when they get paid that earning. It will reduce from the number of hours of that leave that they have available. So that's going to be the default earning that's associated with that leave item. And that's all we really need to do here on the leave itself. And now I can go ahead and click save and we're done with the employer record, but you can come back to the employer record at any time to make any changes to these defaults.